Okay, we're gonna go ahead and get started. Good afternoon, everyone. Um, Welcome to our Office of Economic Business Information session. This is the start of the August sessions. We'll have 3 different days. We have two organizations per day. So this is the beginning. My name is Margaret McGee. I'm the Business Services Manager. Today, we begin the series of 3 business information sessions. Please share this information. I'm pretty sure you guys received the email that I sent out to everyone displaying all of the sessions. We will have this one today, we'll have one Thursday, and we'll have one next Tuesday. Today, we welcome Mr. Michael Ricks. He's the District Director with the SBA. Ms. Betty Brown, she's the branch manager of Hope Credit Union, and Ms. Phoebe Brown, the financial inclusion officer, also with Hope Credit Union. Today's topics are direct loan forgiveness, general information, policies on forgiveness requests, and lender guidelines on how these requests will be processed. Hope Credit Union will speak about the Deep South Economic Mobility Collaborative and other opportunities that Hope may have. Please make note of all of your questions. We're going to have questions and answers at the end of the presentations. So with that being said, I'll go ahead and turn it over to Mr. Ricks.
Thank you so much. I appreciate the opportunity to speak with you today. And I think I'm going to share my screen. Hang on a second.
Can you share?
Yeah, hold on. I'm sorry. While I'm doing that, let me just go ahead and state that the topic of this program, of course, is PPP forgiveness. And, while I'm trying to get my screen to come up, I'll let you know that the PPP loan program, it's really going to depend when you apply for forgiveness as to what your lender is requiring you to do. The general guidance that we have for PPP. Hang on a second, make sure I can. I have too many applications open. I apologize.
That's okay. Would you like me to share the screen? You
No,
got it?
Well, can you see my screen?
No.
All right, hang on. I promise this won't take long.
That's okay. Take your time.
You would think that by this point I will have been trained on this. Can you see my screen?
There we go. Yes.
There we go. Okay, so let's go ahead and get started. Sorry for the delay. The SBA PPP loan program. First thing, the intent of this presentation, of course, is to keep it as brief as possible, so we have time for questions. I'm very cognizant of your time, and I don't want to waste it. But there's a lot of misconceptions about the forgiveness program. We did get a lot of calls from borrowers, applicants that have applied for a PPP loan and have them with various different lenders. And they're asking for our intercession into their relationship with the bank that they've chosen to take this loan out with. The SBA is given very ubiquitous guidance to the lenders in terms of what they're requiring from their borrowers to demonstrate forgiveness. And you, as the borrower, the relationship of your PPP loan and the lender and the SBA and Treasury is this. You have a loan with your bank. Now, what we've done is we've underwritten that loan to you from the bank that, God forbid, if anything should go wrong with that loan, we will buy that loan back from the bank. So when the lender lent you or provided you with this money, it is a loan. When they lent you this money, it was their money. It's not federal money. It doesn't become federal money until such time that a forgiveness application is requested. So if you have a PPP loan and you haven't requested forgiveness yet, then right now that is a relationship between you and the lender. Now the lender is obligated to follow certain guidelines. The PPP loan program is actually a subset of our standard guaranteed loan program that we have with all of our participating banks here in the state and also out-of-state non-bank lenders. It's general guidelines, but that is only to ensure that their guarantee stays in place. So that's what the bank's motivation is. I shouldn't say bank, lender, because we have credit unions and savings and loans that participate as well as big cos and micro lenders. So your lender is obligated to follow SBA rules and regulations regarding protection of that guarantee. Ultimately, that's what the lender's concerned about. At the end of the day, if you default on that loan, then the SBA will make them whole again. The PPP loan program is a 100% guaranteed loan. Now, what that means is if the loan goes into default, we will buy that loan back dollar for dollar from the lender. So it's a zero risk proposition for the bank, but to keep that zero risk proposition, they have to follow our rules. Now, this is a little bit different from any of our other guaranteed loan programs in the past because this loan program provided an option for you as the borrower to have that loan 100% forgiven by the U.S. Treasury through the SBA. So how does that work? It's going to depend on your bank. We have set out policies and procedures of what we consider eligible expenses. We've defined, how much money a borrower can take from a PPP loan based on their own business. We've defined what eligible expenses are, and we've defined that eligible expense percentages have to be a certain amount. Now, I don't want to talk a whole lot about that because, to be honest with you, I could talk a week about that change. It was started with the CARES Act. We had two minor legislative modifications to that program, and then we had a second major modification to that program with the American Recovery Act. And in between March of last year, when we passed this program, or this program was passed, until today, there have been about 60 or 70 different policy interpretations and clarifications and frequently asked questions that have been posted on Treasury's website. So depending upon when you took this loan, the rules would have changed. But I will say this, that all of the rule changes that we've had from over the last year and a half have been to the benefit of the borrower and the lender. So when we've made changes, we didn't take any rights away. We expanded the rights. We expanded your coverage period. We expanded what could be considered eligible expenses. The numbers of different types of entities that could apply for this loan program changed. As an example, when we first launched this program, churches were not eligible. Well, now they are. There's a number of efforts. And again, I don't want to go into that. There's a lot of changes that have been made, but all of them to your benefit. So what I'm going to describe to you is kind of where we're at right now. You may have taken the loan out at a time when it was a little bit more restrictive, but that's not really relevant because those rules no longer apply. So we're at a point now where I think we're at a pretty mature program. And right now, a vast majority of our clients and constituents are looking for assistance for forgiveness. So that's really the purpose of this program. But let me be clear on this, that you have to comply with the lender's requirements. So the lender is going to tell you what they need from you to be eligible for forgiveness. And you have to do that. Now, some lenders might require, I think there were a number of lenders that required people to take PPP loans that they set up a separate account just for that loan. That's not an SBA requirement, but that was a lender's requirement. Some lenders are requiring you to provide your financial information in a certain format. Again, that's not SBA's requirement, but it's their requirement. So you have to comply with the lender's requirements to ensure that your forgiveness is fully forgiven. So we get a lot of calls from people saying, well, my lender wants this and they want that. And I looked at SBA's website and it says y'all don't need it. Well, it's true. We might not need it. But if the lender needs it, then you have to comply with the lender's requirements. Now, the other question that we get a lot is, my lender did not forgive my loan, or my lender only partially forgave my loan. you need to make sure that they forgive all my loan. We can't do that. You know, you have to comply with the lender's requirements. Now, at some point, the lender is going to ask you for specific information. They're putting together their application to the SBA for that forgiveness. If the lender has rejected your forgiveness submission and they haven't sent it to the SBA yet, we can't influence that at all. The only time that you're going to be allowed to appeal a forgiveness decision is if that forgiveness decision comes to the SBA and then we either reject it or we concur with the lender's determination as to what happens. All right, at that point, yes, then you can request reconsideration from the SBA for full forgiveness. But until you get to that point, until you get to the point where the SBA either agrees with the lender's decision to deny the forgiveness or only forgive partial, it's got to come to us first. Now, so what's one question that you have to ask your lender is has your decision been confirmed by the SBA, yes or no? And if the answer is no, well, then you can still work things out with the lenders. You know, negotiate with the lenders, see if there's a way that you can submit whatever you can and get that to us. Or you just have to wait until the lender submits that forgiveness application to the SBA. And then there's a mechanism in place, and this might be a great topic for another session, Margaret. If we have enough people that are in this position, it'd be a good idea to educate people on how that has to happen, because that application has to go through outside the SBA to the Office of General Counsel, and it can be a little bit involved. We haven't had any of these yet in the Louisiana District Office, but we're hopeful that we won't. But if we do, then we're prepared to go ahead and talk about that. So, so again, before you can request reconsideration on forgiveness, the SBA has to reject it. So we can't until that time, we cannot intercede with the lender's decision. That's part of the way the policies and the regulations are set up for this. All right. So having said that, I think that this has been a very successful program. I've got some statistics here that I could share with you, but just to say that, we've made over $330 billion in loans. Only really a small percentage have actually been submitted for forgiveness through this direct platform. And that's really what I'm going to talk about today. In response to a number of most of our smaller community banks, credit unions, savings and loans, micro lenders that have participated in this program, especially when it came to the second draw PPP loan. So that's something else I didn't mention before going into this, is that you actually had two opportunities to take advantage of this program. The first, of course, was the original PPP loan program launched last year. And then the second draw PPP loan, which was signed into law in December of last year, but was implemented, early this year. What that allowed you to do is to take a second PPP loan, get more forgiveness, and it was very popular. However, the regulations governing that program required that the borrowers demonstrate that they had a 25% reduction in cash flow from 2019 to 2020. Most of our borrowers did not have problems with that, but where we ran into issues with our lending partners was they were reluctant to engage in that, because that would have required a full financial analysis from one year to the next. They didn't really think that the origination fee that we're paying on these loans was good enough to offset that expense, that additional expense that they had. And in addition to that, the SBA was giving very ubiquitous guidance as to how this was going to happen. The bottom line is we told our lending partners that, however you decide to calculate 25% reduction is fine with us. But again, there was some concern that perhaps they might do it wrong. So back when we first launched the second draw PPP loan program, we promised our lending community that we would come up with a direct forgiveness platform. based on our own internally created algorithm and process to determine that 25% cash flow or 25% revenue reduction. So the SBA came up with this. So this was something that, well, actually, it wasn't us. We paid a contractor and they came up with it. But we actually have a method now where you, the borrower, can submit to us, the SBA, a direct forgiveness request. And based on the information that you provide us, we can determine if those variables that you've given us is sufficient to demonstrate 25% cash revenue reduction. So it's not as cumbersome, if you will, to make that call to where that forgiveness can be approved. And so far, we haven't had any complaints about how this is supposed to work. Now, we could probably do a separate separate webinar or training program, if you will, for borrowers to use that particular platform. I'm not really going to talk about that today. The SBA Office of Capital Access is having their own webinars, and I sent Margaret an email earlier today, so hopefully she can get this out to everyone that's on this call. The dates and links to that additional training that's being run by the Office of Capital Access. They've asked us not to do that. They have their own training program that's been proven, and certainly, I don't want to interject into something that they're already doing. In addition to that, I've also sent her a link to the direct forgiveness platform for the SBA. And on that platform, there is a link to open a PDF file that gives it's a user's step-by-step guide on how to register yourself if you have a second draw PPP loan, and then how to get into the system and what information that we need and how we need it to submit that direct forgiveness request. So all the information's out there. I don't want to go over it again. I mean, I'm happy to do it, but we have there's going to be a link, a webinar in a couple of days, and then there's going to be another one the next week, and then the week after that. And if there's high demand, then we'll do more. So there is going to be additional information. Really, the purpose of this presentation is to kind of lay out for you, because since you have to work with your lending partner, and your lending partner might have different parameters of how they want you to use how they want you to submit that forgiveness application. So for me to try and do a class on how to submit a forgiveness application, we got 128 lenders in the state of Louisiana that made PPP loans. In addition to that, we probably have a couple hundred more out-of-state non-bank lenders that are outside of our area of operation that have also made these loans. Every single one of them has a different method for doing this. So so really what I want to do for you is to kind of give you an idea of what your lender is looking for from us, so you can understand what they're trying to get from us and how to communicate it and the flow. And also, of course, to give you some more information about the interim and final rules in the PPP direct forgiveness program. Why did we do this? Well, really, it's for those reasons. A vast majority of our loans were for small dollar amount loans less than $150,000. The origination fee that we paid our lenders really would not have made up for that administrative cost that they needed to do to verify that these firms met their requirements. So that's why we came up with this. This was a condition for us to get our lending partners encouraged to use this second draw program. Now, the revenue reduction score, again, it's based on an algorithm of variables that you're going to put in. I strongly recommend that you go to our SBA direct forgiveness platform. You can actually do a Google search and then type that in, and it'll come up, and you can see the step-by-step user's guide, and you can see the information that we're looking for and what we want from the borrower. So that information is going to be used to determine whether or not there is an algorithmic method for determining that you've had a 25% without actually pulling out financials and tax records and all that other stuff. So this is a much simpler process. It's already been approved by the Office of Management and Budget. Treasury's already blessed off on it, so we're all good. So if you submit your application and you've hit all your variables, everything's going to be fine, and and you'll be able to qualify for full forgiveness. Now, and I think it's in this later on in the presentation, I'll mention this again, but let me be clear that using this direct forgiveness platform is contingent on your lender participating in the program. Again, like I said in the very beginning, this is a loan between you and your lender. Until a forgiveness application is actually received by the lender and sent to us, then it doesn't involve us. So they have to be on board with this. So before you actually start down the path of actually registering and filling out full forgiveness, reach out to your lender and see if they are participating in the direct forgiveness program. We have contacted every lender in the state. We have trained all our lenders in the state on how to use this. So, but some lenders have already invested in their own forgiveness platform, and they're comfortable with doing, using their methods. So if they're not using our direct forgiveness platform, fine, you're going to have to use theirs. All right. So just keep that in mind. Again, this is a loan between you and the lender. Again, this is kind of just a reiteration of what I just told you before. What the score doesn't validate is any information that you may have already provided to your lender. So one of the issues or problems that you may have with your lender after you submitted this application is when you submitted a direct forgiveness application, it doesn't match up with what your lender is. All right, the lender should come back and inform you, and then you can make modifications to your application. But for now, the direct forgiveness platform is really only going to work if it matches up with the information that you've already provided your lender. There is documentation, for example, that you will be required to submit. If your lender already has it, it's not necessary, particularly that you include that documentation with on your platform. But understand that we may come back and ask for it again. It's attachments that your lender is going to need to make that final decision, because even though you're submitting that direct forgiveness to us, and we're going to take what you send to us and we're going to say, on the surface, this looks like it's eligible for forgiveness. But ultimately, the lender is a deciding factor as to whether or not they're going to accept what you send in. So I would advise you to make sure that any documentation that you provided your lender during loan origination, if we're asking for it again in forgiveness, go ahead and supply it again. But again, if you don't and the lender has it and they're okay with that, then we're okay. Again, comply with your lender's guidance on how these things are supposed to be done. This is just instructions on for our lending partners. These are the things that the lenders have to get from you. You can use this direct forgiveness application for both first draw and second draw PPP loans. It's set up mostly to help with the second draw, because that second draw is the one that has to have the 25% reduction. But we can accept applications for first draw. But again, that's up to the lender. They may decide that no, they want you to submit your first draw, using their system, whatever they have in place, and this is only going to be used for second draw. I don't know why they would do that, but again, that's a lender's call. They can do that. So just check with your lender again to make sure that you're in compliance with what their program or what they want to do to get that application forgiveness request to us. Some of the reasons why lenders might opt in, again, simplicity. It can be used for first or second draw. It provides a one portal access to processing these forgiveness requests, and rather than the lender having to chase you down or to try and figure out whether or not you've actually submitted a forgiveness application, we're going to let them know when that application comes in. So it takes a lot off of the lender's plate. Now again, and I don't want to sound like a broken record, I'm so sorry, But, again, the lender doesn't have to use this. If they decide that they don't want to use this or they've opted out. Now, first, let me say a vast majority of our lenders have signed up with this. There are a few out there that haven't. So check with them first to make sure. But if they're not going to accept direct forgiveness applications, then you're not even going to have that option of actually selecting it. You would see that when you get to the portal. All right, here now, this is for your lenders. So I want to make sure that you understand what your lenders are looking at if and when you submit this direct forgiveness application to them. This is what their screenshot's going to look like, and again, they have to elect to participate. There's an easy way for them to do it. The lender location ID is just SBA's internal control, so they can actually go down through a drop-down menu. They can call up in PIMS their lending institution, and they can go ahead and they can select participating in the program. Now, the reason why I'm showing you this is that it's really easy to use. It's not difficult at all. Where the lender disagrees with the borrower, again, this is part of the process. The lender might not agree with the information that you submitted, and they will give you an opportunity, I hope, to amend what information that you sent in so that they can apply for full forgiveness. Let me stop right here and just say one thing, because I get this a lot. Trust me when I say the lender wants you to get this loan forgiven. They do not want to carry a 1% loan out 3 or 5 years, depending upon what terms you signed up for. They're not making any money on this. And in fact, of course, it doesn't count against their lending limits since it's 100% guaranteed, but they don't want to service a 1% loan over 5 years. I mean, there's no money in that for them. They want you to get forgiveness. Lenders are motivated for you to get as much forgiveness as possible. So the idea that somehow the lenders are they don't want to, they don't want to accept forgiveness applications because they want to keep the loans on their books. They are not making any money on these loans. Any money that they made on these loans, they've already made it. We already gave them the origination fee. So the forgiveness application process is kind of cooked into that origination fee that they've got. But they want to get these loans off their books. They do. They're in a lot of cases, you're their relationship customer, and they want to make you happy. And maximizing forgiveness, of course, is going to be something that they want to do. So understand that if a lender comes back and says, we're not happy with this information, that this is incomplete, they're not trying to rip you off. They're not trying to deny you a benefit. They need to make sure that they comport with our requirements, because if they don't, and something goes sideways with this loan, they will lose their guarantee. So in many, many cases, the lender is interpreting our rules in a certain way. And again, if you cannot come to an agreement and at some point this loan gets refused or partially forgiven or not fully forgiven, once we concur or reject their approval, which could happen in cases of loans of less than $150,000, I don't think that's going to happen. But only when the SBA says no, that's when you'll have a right to appeal. We can, again, that's a different topic altogether. I'm assuming that no one's going to have any issues and problems with getting this done. And this is what they do. They select it. It's they review what you submitted to them, and then they can either approve, reject, or bar action required. Of course, if they click bar action required, that requires them to respond back to you, the lender, through this portal of the additional information that they're going to need to process that forgiveness request. Again, I'm going to step through again. This is rejected, bar required to contact lender. Okay, so again, you will have to contact your lender and figure out what the problem is. All right, now this is important. If there's additional requirements that you have, some of the principal reasons, and the red text off on the side sort of illustrates A lot of times it might be that the information provided is matching up, primary contact name and title. You know, a big question that we have with PPP loans. And again, I don't want to belabor it too much and take up too much of your time, but a lot of times, if it's a corporation that's applied for a PPP loan or a partnership, it might not be clearly identified who is authorized to sign the loan and sign forgiveness, or perhaps when the loan origination first happened. We see this a little bit, I can say all the time, or a spousal couple who have applied for their jointly owned business, and one spouse may have filled out the application and put their names, and then the other spouse has come in and they're applying for forgiveness and the names don't match up, right? That's easy to fix, but you know, we see that a lot. Your primary NAICS code might be different. Now, a NAICS code, just pretty briefly, it's the North American Industry Code standard for different types of businesses. So depending upon your business, there is a NAICS code that identifies your business. Some NAICS codes are not eligible for this program. So you may have you may have two different NAICS. Now, we have a lot of businesses, especially in our 8A portfolio, that operate in government contracting, and they operate in multiple different industry areas. And depending upon whatever contract they're bidding on, they may include in that contract bid a different NAICS code from their primary NAICS code, their primary business. This gets confused a lot. There may be a NAICS code discrepancy, all right? So, you know, again, you have to go back to your original application and see what you claimed as a primary, and then do it that way. Sometimes there's a coverage period, you know, issue. Numbers of employees on the application might be different. There's any you know, I think a big one is financial information that's submitted. One of the requirements of the PPP loan program is that at least 60% of your loan has to be applied to payroll and payroll expenses. And if you haven't clearly delineated exactly what those payroll and payroll expenses are, and you have additional expenses that are eligible but can't be more than 40% of the loan, then what might happen is, you know, what you applied for back when you originated the loan, perhaps you had fewer employees that came on board. The information that you've provided back to the bank, you know, does not indicate a expanded coverage period. So the loans were initially made for 8 weeks of payroll and payroll expenses, but the SBA expanded the coverage period out to 24 weeks, which means as long as you can demonstrate that that 8 weeks of money was used in that 24-week period. So even if you had fewer employees, you should still be able to get forgiveness. But if all you submitted to them was 8 weeks of payroll and payroll expense information, then your full forgiveness amount might not be possible. So again, they may reject that and then come back and say, all right, well, we gave you 8 weeks of loan. You know, we gave you a loan for 10 people. All right, let's just keep the math simple. You were only able to bring back, you know, 5 people back on payroll. All right, in a normal world, everybody would have come back and you would have gotten full forgiveness in 8 weeks. But since you only had 5, oops, sorry about that. Since you only had 5, then you're going to need 16 weeks to demonstrate that forgiveness period. So you may, you know, there may be some issues and problems with that. There's ways that you can get around that you didn't bring in full employment. There could be issues with the original origination, that it was probably not closed properly, but the loan was made. And, you know, as long as you can demonstrate 60% of your forgiveness was payroll and payroll expenses over a 24-week period, you should be okay. So again, there could be any number of reasons why what you've submitted to the lender isn't matching up with your application, and there's ways to get around that. This is something that we've seen a few times, not often. Most borrowers really want full forgiveness. Again, our lenders are completely committed to getting full forgiveness. They don't want to carry notes forward if they don't have to. I'm I can't understand why a borrower would not want full forgiveness, but apparently there are cases where they are. Well, if that happens, of course, the borrower is more than within their rights to not request full forgiveness. And if that's happened, what happens is we get an amber alert, if you will. It's a yellow alert that says, based on our information that we have here, based on our information that we have here, it looks as though the borrower has not asked for full forgiveness. All right, and that gives you, the lender, the opportunity to contact that borrower and say, we think you made a mistake here. And they may come back and say, no, that's what we're applying for that. It just gives us an opportunity to take a look at it again. Perhaps the borrower doesn't know that they might be eligible for full forgiveness, and they're just operating on what they think is right. So that's what that means. Frequently asked questions. All right, again, this is mostly questions that the lenders are going to have, and it regards resources. The SBA, of course, stands by. Our district office is set up so that if a lender is having difficulty with this platform, we can contact them and help them with any technical issues that might come up. You, as the borrower applying for forgiveness through this platform, you have your own set of resources, and that's going to be on the landing page of the forgiveness platform. Again, this is very similar to what you're going to see, but this is what the lender sees, of course, is when they get messages or correspondences, as these email messages come in, they're notified. Let me just really, first of all, forgiveness.sba.gov. That's the landing platform for forgiveness for SBA for the lenders. You have a different one. Again, I sent that to, but you can just do a Google search, SBA PPP forgiveness platform, and that'll be close to the top of your web browser, and you can click on it and all the information that's available. I'll show you in a minute what that front page looks like, since I have screen share here. There is a hotline. Do not call this. This is for the lenders only, but if they have an issue, then they can contact us. One of the issues that we're having, and again, I want to bring this up to you because it could be situations that you're facing yourself. The SBA has our own forms for submitting forgiveness, and of course, just like if it was in the 1950s, there's actually forms for all this. But again, because of the way the program was created, we have given lenders the opportunity to create their own applications, their own, as long as they're asking for the same information, they can have their own forms online. They don't have to look anything like ours. So when these lenders created these applications, they have an API. It really is just how one application communicates with another. So now that we have this forgiveness application, there is a concern about exactly how do they get their platform to interface with ours, and we provided them with guidance to do that. Lenders, every lender can process, have 10 people using this. So each site license comes with 10. So there shouldn't be any issues at all with, applications coming in that bandwidth problems, which shouldn't be a problem. Again, like I mentioned before, they can use their own forms, and they can communicate to this platform using their own software if that's what they want. And if they need any help, we have that available for them. I'm going to skip that and roll right into questions. But while I'm doing that, let me first call up that hang on a second.
We're gonna actually take the questions at the end, if that's okay. I
Sure,
asked everyone to jot down their questions, and we'll do that at the end.
Okay, so here's just real quick, and then I'm going to stop because I know we have others. Here's the SBA. Well, now that's not supposed to happen. Well, I've got this toolbar at the top, and I can't. There we go. All right, well, it's not working. It was a little while ago. I had it up. There it is. Okay, so that is what the forgiveness portal looks like. And so it's directforgiveness.sba.gov. And the first thing you got to do, of course, is you've got to click to register to start. And then you'll create a username. And then eventually, as you go through, and I'm not going to do it right now because I don't want to take time, because under that Hope has been waiting patiently for me to finish. That's the portal that you're going to use to start your request. And again, we have live customer service. And again, we have webinars that I've given to, I've already sent that forward. So if you're interested in participating in a specific class. So that's really all I have, Margaret. So back to you.
Thank you so much. Really appreciate that. And I will share that information that you sent to me. And I'll also share the presentation in a PDF form. And that's the forgiveness trainings and also the resource guide, correct?
Thank you. Yes.
Yes. So everyone that joined this Zoom call today, you'll actually get that information via email. So I'll go ahead and turn it over now to Ms. Brown with Hope Credit Union.
Well, good afternoon, everyone. My name is Phoebe Brown, and I'm the Financial Inclusion Officer with Hope Credit Union. And I believe, Margaret, you're going to share our slide.
Yeah, let me go ahead and bring it up.
I'm not sure if Mr. Ricks needs to take his down.
Yeah. Mr. Ricks, could you stop sharing your screen? Uh-oh.
Yeah, I'm sorry. I put it on mute. It's not letting me. Hold on.
I got it. Thank you. Yeah. And
Yeah, I'm sorry. It's not letting me.
no, I got it. Can
Oh,
everyone see the Deep South Economic Mobility Collaborative?
Yes, I do see it. So I think everyone else can.
Okay.
Okay, so I'll be presenting this PowerPoint with Miss Betty Brown. So you got two Browns with you on this afternoon. We'll be talking a little bit about Hope and the Deep South Economic Mobility Collaborative. Next slide.
Okay, I'm good.
In this slide here, you will see that we're just giving you an overview about Hope. Hope actually comes in two forms, as you see. We have our Hope Enterprise Corporation, which is our not-for-profit arm of Hope. It is a not-for-profit 501c3 where we're able to have loan funds. We have our Policy Institute, which the Policy Institute is where we advocate for the work that we do. So if things come up or arise that we feel that it needs to go further and brought to other levels of entities within our city and our government, et cetera, our Policy Institute actually helps deal with that. Then we also have our community development intermediary, and we are a CDFI and a CDE. Now, what that simply means is CDFI is Community Development Financial Institution, and CDE is we're a community development entity. Having the title of a CDFI helps us to be able to take advantage of funds that we may not be able to normally do if we didn't have that label. So what we do is we actually receive funds where we're able to reinvest those grant dollars back into our underserved community, helping us to be able to help our borrowers and small businesses to be able to accomplish their goals. Then we have our Hope Credit Union, which is also a great asset to small business owners and individuals. It is federally chartered and it is insured. It is an insured credit union. It is also a CDFI and CDE. And when you become a member of the credit union, you actually are a member, not a customer, which is a great thing because you actually kind of have a voting share as to how we pick our board and things of that nature. So the mission of Hope is just simply to strengthen communities and build assets. We try to improve lives in economically distressed areas in the Mid-South by providing access to affordable, high-quality financial products and related services. Next slide. So to tell you a little bit about the Deep South Economic Mobility Collaborative, better known as the DSEMC, it is a joint effort between Hope Enterprise Corporation, Goldman Sachs 10,000 Small Businesses, 7 cities, and 9 historically Black colleges and universities to invest in the power of small businesses and entrepreneurs in the Deep South. This particular program is designed to help stabilize and strengthen businesses and communities. These communities have been through devastated circumstances through this economic crisis. So it actually helped provide small businesses with loans, as well as access to business education classes and business support services. Next slide. So the DSEMC, which is Deep South Economic Mobility Collaborative, it actually allows you, the small business owner and individuals, to be able to have affordable quality products and services. Also, it makes available education through the Goldman Sachs 10,000 Small Business Program. And that program is simply, it invests to help entrepreneurs create jobs and economic opportunities by providing them with greater access to education, financial capital, and business support services. We also collaborate with the city of New Orleans to be exact, and HBCUs to ensure access to business support services because we want you to grow as a small business. So we're here to assist in that effort. Next slide. As Mr. Ricks was talking about the SBA PPP loans, and as I mentioned about being a CDFI, we were able to participate in the PPP lending, actually both rounds. Here we show you that in 2020, we closed and approved over 2,678 loans, which totaled $83 million in funding for small businesses. And 71% of those loans were actually Black-owned businesses. Now, this last round in 2021, we closed about 55 loans, meaning 2,555 loans were closed. And that totaled about 57 million, which was a total of 86% Black-owned businesses. So that we were on the front line helping underserved communities and minority businesses get the funding that they need to help be sustainable during this economic crisis. Next slide. In this slide, you will see we have it broke down for you in the different areas that we actually provided some of that PPP lending. You will see New Orleans, we had about 747 loans, which totaled over $25 million. So we had a total of $57 million in dollars that we were able to lend and get out there to those underserved small businesses that really needed the assistance from those loans. So we did what we could do with the PPP lending. Now, we wouldn't be able to do that if we were not a CDFI, a community development financial institution. As I stated, being a CDFI, it helps us to be able to get those funds from entities such as the federal government to be able to administer and to disperse within the communities that we service. Next slide. Now I will turn it over to Betty Brown, and she'll talk to you about the HOPE Economic Mobility Tool.
Next slide, please. By the way, good afternoon, everyone. HOPE leverages its diverse funding for community investments from a number of sources. We hear a lot about new market tax credits. That is actually really big and where we have these sources of funding coming from. Community facilities relending programs, a lot of philanthropic capital comes to us, CDFI funds, state and local funding, and just from having our credit union with our deposits, our reserves, we are able to have funds to lend out. So we get funding from a number of sources, and you know, it enables us to go into the communities that we serve. And one thing not mentioned is that we primarily focus on 5 states, Mississippi, Louisiana, Mississippi, Alabama, Tennessee, and Arkansas. And the reason for that is because these are the poorest and I would say the areas where people need the most help financially. You know, these are the most deprived areas. And so, you know, it is very rewarding to work for a company that is looking to really change lives of individuals who really need the help. So we need that funding. And so we have a great team that solicits this funding. Next slide. Small business tools. We have a number of small business loan products. A lot of them depend on, I guess it'll start off with the dollar amount or the particular need. But basically, with small business lending, I guess you can classify my title as New Orleans branch market manager and small business officer. So those loans that I primarily work with are under $250,000. Now, of course, we do loans much more than that, but that falls under our commercial lending. So we're working with SBA Community Advantage loans, real estate loans for purchase or refinance, vehicle loans, new or used for a business, equipment loans, new or used. Also, if you're putting up your cash as collateral for business purposes, we can do those type of loans also. And of course, unsecured loan for business purposes. We are a full service credit union. Most of my years has been in the banking industry. And I must say, in comparison, HOPE, I would say, has more of a variety of products because it's an offering to a number of people who typically don't have the opportunities, you know, to have various types of accounts. So, you know, we just revamped our business banking product line in terms of accounts. So we have a wide range of accounts. You know, you can have individuals access your account. They don't necessarily have to sign on your account, but you may have an office manager that you want to give a certain level of authority to. So that being said, there's probably an account for anyone you know, that's listening that would best fit your needs. Next slide. Speaking in particular about our SBA Community Advantage loan, This is a product we're really, really hoping to grow the portfolio on. The maximum loan on that is $250,000. The wonderful part is the maximum interest rate is up to prime plus 6%. It must fit the SBA definition of a small business and be located in our footprint, which, as we're speaking here, Louisiana. It has to be for profit. It is not eligible to entities that are nonprofit. Minimum personal credit score is 600, and the use of the funds can be for purchase of buildings, machinery, equipment, fixtures, and debt refinance. Next slide, please. Small lending requirements. There's a lot of documentation required in the process of applying for a business loan. And I will say, we really work with you in making sure you understand what the documentation is, because our goal is to get an approval. And so we're going to work with you on the front end, prior to the application being submitted. So, of course, it starts with a completed business application and personal financial statement. We're going to need business and personal tax returns, because people may say, well, I'm applying for the business and not personal. Well, the issue may be we need to ensure that you have proper cash flow to cover the loan. And sometimes it does fall over to personal, depending on the structure of the business. We ask for management resumes, check stubs, and bank statements. If there's any collateral that can strengthen the loan and can be used, we would like to know that. And of course, for those who are startup businesses, we need a detailed business plan. I will say we will review the business plan. Pro forma information is great, but of course, it's an estimate. So we don't just look at that for startups. We have to make sure you can cash flow. Of course, your EIN, if you are a corporation, we need an EIN letter and your articles of incorporation. Next slide, please. Next slide, please. This is we have sources of where you can get technical support. As I said, we're looking to get a loan approved. And so many people, they have a great idea, but they may need some of the technical support with things such as the business plan to start out with, researching your market, various things, expense reduction, cash flow. So we're working, as Phoebe talked about, with the Deep South Economic Mobility Collaborative. We do partner with not only the universities, such as Xavier, Dillard, and Southern, with their business centers, where they're supplying technical support to the business owners. But we also have a partnership with a company called PCV. They're an awesome group of people that will lend their expertise to help the business in determining how to get to the next level. So this is another partnership that we have. And as you can see, they really spend a lot of time advising, up 15 hours of advising and technical support. Next slide.
So now we're going to talk about the community economic development tool. Next slide. When you look at the community economic development tools, it looks in various ways, as you see here. It just simply means that we actually participate and have affordable housing products where we try to make sure that we are helping individuals be able to secure housing and live in, to get out of the underserved markets. Because when you look at the Deep South region, as Betty stated, we're serving the highest poverty rates in the country along the Deep South, where there's severe lack of affordable housing. So we participate in those types of programs to help our members and those get the housing that is rightfully deserved to them to be affordable and quality living. Also, we have a participation in community facilities like education and healthcare. We participate with the schools and healthcare centers where we try to help educate their employees as well as their staff and the people that they service. We also participate with the healthy food financing, where our Community Economic Development Department is on the ground helping put food services within areas of the underserved community. Then we also have the New Market Tax Credits. Now, New Market Tax Credits, it is a program that finances community facilities and businesses that support economic development. So they actually support job creation and the expansion of essential community services such as quality health care, education, and other services to the underserved communities across the states we service. Also, we have the Opportunity Zone, and we participate in the SBA lending products such as the 7A and 504 loans. Next slide. Now, the Goldman Sachs 10,000 Small Business Program, as I stated before, that program, it invests in helping entrepreneurs create jobs and economic opportunities. This program helps provide access to the education and financial capital and business support services that is needed to help the businesses grow. So this program covers all 50 states, as well as Washington, D.C., and Puerto Rico. Goldman Sachs has been on the ground pushing these programs for ages, and now Hope is so happy to be a part to help them market their services, as well as help us market the services of the Deep South Economic Mobility Collaborative. Next slide. Goldman Sachs also has their 1 Million Black Women program. Now, this program, it was recently launched, and it is an initiative to commit $10 billion in direct investment capital and over $100 billion in support to address the dual disappropriate gender and racial biases that Black women have faced for generations. This program proves that they feel will be a success, and they're encouraging minority women to look into it and to join as they try to help further your growth and overcome these different disparities. So Goldman Sachs is pretty much another component to help the Deep South Economic Mobility Collaborative grow. It is a great second piece to get businesses the help that they need and a great avenue for minority businesses to get access to capital. So we have a lot of this information on our website, but we surely can provide you further information about both programs. Next slide.
And at this time, I'd like to talk about our Hope Affinity Network. On the screen, it states colleges and universities, but it is a program inclusive of all businesses, whether it's schools or just any business in general. Next slide, please. what the Hope Affinity Network is that it is a partnership with businesses whereby Hope will provide financial services to staff employees, participate in open enrollment, student orientations, depending on the entity, to help people open accounts or answer any questions they have as they set financial goals for the year. Also to provide marketing and educational materials such as brochures, applications, payroll inserts, and membership packets and posters. We also host financial education workshops. So a lot of the entities that we will partner with, some people are going to say, well, I have an account already. But some people don't have an account and some people do, but no one has ever taken the time to help them get to the next level in their financial situation. So part of this program is to provide a lot of financial coaching to these individuals. So the partner organization also has to have a commitment because it is, a partnership. So they must display and distribute Hope marketing and educational materials, host 2 Hope membership drives, also invite Hope to participate in a student and parent orientation event if it pertains to, say, a school where if it's not a university and kids are under 18, we get parents' participation. We're teaching kids about saving and how to build their future financially. And lastly, it includes information about Hope in at least one communication, email, or newsletter. We have a number of partnerships, and we have seen growth with various individuals who sometimes just needed an individual to help them understand, because unfortunately, a lot of financial institutions don't take that time with an individual. However, I can say Hope definitely does. Next slide, please. In this instance, I hope you can tell everyone benefits. Becoming part of the Hope Affinity Network benefits staff by building a stronger financial foundation and giving them the tools they need to be successful. At the same time, it provides opportunity for organizations to demonstrate their commitment and build stronger relationships with their employees and student body. Right now, we're hearing that, there's a job shortage. I think it's a wage shortage, but I'm going to go with the job shortage. But more importantly, we need to attract and retain employees. And so this is a great tool for employees because there are a number of benefits that come along with this partnership and package that we give to the employees. In some instances, there is even a loan component, discounts, things of that nature. So it's very important to provide these services to employees right now because they need it. Everything goes up, it seems, more than salaries. And so if there's a benefit such as this, it could be beneficial to retaining employees. And I've had employers say things like, this will help if my employee, car stopped working and maybe they need, a way to get a loan or whatever. So it's a great opportunity. Next slide. Okay, so we capture a lot of the work that we do, the HBCU CDFI Economic Mobility Strategic Guide. And so we are tracking all of the information with our partners so that we can see a progression of where they have started and what has been the benefits of the work that we're doing through this collaborative with the HBCUs. And so it will be an ongoing process, and I look forward to many great results. Next slide, please. And that is it. So if you have any questions, we would be happy to answer them.
Okay, so now's the time we can if you have questions for Mr. Ricks or Miss Phoebe Brown or Miss Betty Brown, now is the time to ask. No questions? Well, I guess the presentations must have been, I mean, very informative and fabulous. We don't have no questions.
Well, let me just say this. There's tons of information, and everybody has a particular situation. Just want to offer, based on my information listed, our information listed, please feel free to contact us. Of course, in this short period of time, we could not cover all of the many products, services, or technical information. And so just want you to know we're here if you need us.
Thank you so much for that. So if we don't have any questions, we'll go ahead. I want to first thank Mr. Ricks, Ms. Brown. Well, I have to say Miss Betty Brown and Miss Phoebe Brown, you know, for being here today and sharing with us the informative presentation. We really appreciate it. And thank you all for attending. Hopefully you'll be able to join us on Thursday. A Thursday session, we'll have the Southern Opportunity and Resilience Fund that will be presented by True Fund. And unfortunately, the Local Initiative Support Corporation is unable to join us. So we have, Lift Fund has graciously agreed to participate in Thursday session, and they'll give us information regarding the Invest NOLA COVID Relief Fund. So that'll be an addition, you know, to our session on Thursday. We also have a session on August the 24th. I'm trying to see if I can share this so you guys can actually see it. So it keeps sharing. My apologies. I'll try this one more time. Okay, can you guys see the screen that has the dates listed?
Yes, we can see them.
Okay, so yeah, so those are our next two sessions. You know, I would love to have you guys to join us. As I stated before, the information that Mr. Rick shared with me, I will definitely get it to those that were in attendance of this session today. And if there's no questions, we'll go ahead and end this session now. Thanks everyone for joining.